Palantir was once dismissed by critics as an overhyped meme stock. Now, it's a technology giant worth more than $300 billion. But compared with other companies that size, Palantir is surprisingly hard to explain. Apple sells iPhones. Microsoft sells Windows and cloud services. Tesla sells Teslas. You can picture what those companies do, but Palantir is different. It builds software that helps organizations turn messy data into decisions. That could mean a bank tracking fraud, a hospital managing beds, or a defense agency coordinating a mission. The details change, but the problem is usually the same. Important information is scattered across systems that don't really talk to each other. Palantir helps connect that data, a simple idea that became incredibly valuable. And to understand why, you have to go back to where Palantir started. The company was founded in 2003 by a group that included Peter Thiel and Alex Karp. Its early work was with the US intelligence community, especially around counterterrorism. It helped analysts pull fragmented information together, spot patterns, and make faster decisions. That became the foundation for Gotham, its government and defense platform. Then, Palantir took the same idea into the commercial world with Foundry, and it started to expand beyond defense and intelligence contracts. By the time Palantir went public in 2020, it had major government customers, a growing commercial business, and just over $1 billion in annual revenue. But investors still didn't really know what to make of it. Revenue was growing, but most of it still came from government customers. That was both a strength and a concern. Government contracts can be hugely valuable, but they can also be slow and unpredictable. And the bigger the problem, Palantir was still losing money. By late 2022, its stock had fallen from its 2021 high of around $45 to under $6. So, for a while at least, the doubters had the upper hand. Then, the AI boom arrived. Suddenly, the problem Palantir had spent years solving became one of the biggest challenges in tech. Major companies needed AI that could work with their own data inside their own operations. In 2023, Palantir launched AIP to do exactly that. And that's when the big idea clicked. Palantir was selling the software layer that makes AI genuinely useful inside real organizations. And with that, Palantir quickly became one of the clearest AI bets among investors. From under $6 in late 2022, PLTR surged to about $207 at its peak in November 2025. That's a more than 30 times move from the bottom. But this wasn't just the stock going up because AI was hot. The business started backing up the story. In the first quarter of 2026, Palantir reported $1.63 billion in revenue, up 85% from a year earlier. US government revenue grew 84% to $687 million. And importantly, US commercial revenue jumped 133% to $595 million. So, Palantir is no longer just a government story. The bull case is clear. If AI becomes part of how governments and large companies actually operate, Palantir is in a strong position. But here's the catch. The stock already prices in a huge amount of success. At recent levels, Palantir has traded at around 150 times earnings and more than 40 times forward sales. That means investors are pricing it like one of the defining AI platforms of the next decade. And maybe they're right. But when expectations are that high, even good results may not be enough. If demand slows, the stock can fall, even though the company itself is performing well. Then there's the controversy. Palantir works with some of the world's most sensitive law enforcement, public health, and government data. Critics worry about how much sensitive public data should depend on one private company. That matters for the stock because Palantir's government ties can help it win huge contracts, but they can also bring political scrutiny and public backlash. So, what should investors watch? First, commercial growth and AIP adoption. Is big business still buying in? And are companies actually building Palantir into their operations? Second, government contracts. Is the company still winning major deals? They're still a huge part of the business. And third, valuation. Because At this price, Palantir has to prove it can grow into the hype. There are plenty of AI stocks built more on hype than results. And maybe there was a time when some would argue Palantir belonged in that group. Not so much today. This is a company growing fast with strong margins and real demand. It's already a success story, but it's one that commands a very high price and depends on that success story getting much bigger. So, what do you think? Is PLTR one of the best AI stocks on the market, or is the price getting too rich? Let us know in the comments and tell us which stock we should cover next.